What's going on, guys? Just throwing together a quick update video. I don't really have anything new to talk about, so I'm pretty much just going to be touching on everything I've been touching on for the previous week, for the past week. Nothing really has changed. We're still retesting the macro breakout on AMC. SPY is still extremely bullish, and I'll just jump into the video, and we'll start off with the macro on SPY. I'll say this until I'm blue in the face. The market is bullish. SPY is bullish. The meme basket is bullish. The whole market is about to squeeze. So, same picture I've been showing: the descending broadening wedge on SPY, the diamond bottom, the breakout and retest of the descending broadening wedge, a year-long downtrend, confirmed the retest and found some more upside from there. Golden cross on the daily, extremely bullish on SPY, and day number 45 in a row, closing over the 200 EMA. All of which is extremely bullish. I spoke about this in my last video as well, how this downtrend on SPY, this descending broadening wedge, transitioned into an ascending triangle where you have the support and your resistance at 418 is a key level. Key level of resistance at 418, and we've previously broke through it. Last week, came back down to the support again, and then broke through it again this week and early on in the week. And I mentioned in my last video, you could probably expect SPY to trade relatively sideways in this range, testing on the breakout at 418 for a day or two. We saw SPY come back down through the resistance to 416.20 roughly, I believe was the low there, and then found a bounce back up to 418, and then came down today to 417 again. And then from there, SPY was on just an absolute fucking mission, ripping from 417 all the way back up to a double top at 423 and closing the day 421 and change. Extremely bullish on SPY. Nothing bearish about this chart. Very, very solid day today for SPY. There's nothing bad you could say about this chart. Besides the people that are theorizing market crash because of MOAS, there's nothing you could say bad about this chart. There's nothing bearish about this chart whatsoever. SPY is extremely bullish, and that is that. Key levels of resistance to look out for in the upcoming weeks: 429, roughly 430, 438, and 450 to the upside. We might be getting up there relatively fast. I mean, if this was the breakout, the retest of the breakout here of the ascending triangle, we could be seeing these levels relatively fast. That's not to say that SPY can't come back down one more time and, you know, bounce clean off 418 and go from there. But coming up to a double top today and then closing around 422 looks very, very good. It looks very bullish to me. And that is pretty much it for SPY. Spoke about this last time as well, how the market is synced up, and here is your descending broadening wedge and ascending triangle on SPY. It is in the process of breaking out. Potentially this was already the breakout, the macro breakout on SPY. I mean, we're sitting above resistance, so technically that's a breakout, and we got the retest. And then the macro breakout on AMC here, and I mentioned we're in our retest. We've been in this retest for almost 4 full weeks now. So this retest is taking a very long time. Spoke about this last time as well, how I don't really mind that. Spending a lot of time in the retest, to me, is a good thing, meaning we're expecting a very, very big move to the upside. So market is synced up. SPY is breaking out of a downtrend. Not a downtrend, you know, from this low here, the November lows of 350 roughly. It's been rallying to the upside. But now this 418 level, which was a very key resistance point, we broke over, and with that we could be expecting some serious upside on SPY. And at the exact same time, AMC has broken its macro and is in the process of retesting. So that is that. Macro on AMC, nothing has changed. Green, red, and blue. Green, red, and blue tracking perfectly. The only difference here is that this is descending price action rather than being flat the way it was prior to the squeeze in 2021. But we are tracking perfectly, and there's really not much else to say there. Touching on this one more time, the volume profile. Low volume all the way through this three fractal sequence here. Till the blue box, the volume starts picking up into your squeeze where you see the highest the all-time highest volume on AMC, the January squeeze, come back down, and then work your way back up for the June squeeze, and then come back down again, and then we play out the green, red, and blue again, relatively low volume all the way through here until we hit our absolute low, where volume picked up. This volume profile, the volume we're seeing right now, is comparable to the volume that we saw in both squeezes, January and June. One other thing that I wanted to touch on really quick, I'm not going to really go too much into this, but the daily EMAs are pretty much the same all the way through this as well, in the green, red, and blue. I'm not going to start zooming in and going through this, but if you want to look for yourself, you can. The daily EMAs here are pretty much the same thing. This green, red, and blue here, and then this green, red, and blue here. Pretty much the exact same thing on the EMAs. And to go a little bit further into that, I'm just going to be showing the last portion here, the blue box that I've been touching on, which is where we are. And I'll speak about the daily EMAs here because I find this important, because this is where we are, and we're heading to our squeeze and all-time highs. So 200 EMA coming all the way across the top here, right across your tri-peak. Same here, hovering above the top here, right across your tri-peak. And then you have your 100 EMA crossing right through your tri-peak and then right through your breakout point. Exact same thing here, right through your tri-peak and then right through your breakout point. 20 EMA under the 50 most of the time here, crosses in the tri-peak, comes back underneath. Once it crosses again, that's where you squeeze. Same thing here, 20s under the 50 the whole time, crosses in the tri-peak, comes back underneath, crossed again, but actually crossed to the downside here, as this retest that we've been in is now almost at 4 full weeks of retesting this breakout, taking a very, very long time. Again, not a big deal. This retest here is fucking gnarly. This looks very, very good. This looks crazy, honestly. The breakout here and then the retest that we see here, holding up very strong, closed above again today. Potentially the bottom is in here on the retest. I'll get into that later on in the video, but absolutely no complaints here. This looks very good. The next thing we're going to be looking out for is a climb back up to 650, and then from there a gap to the $8-9 range, which would be these candles here, and then from there would be our squeeze. So that's pretty much it for the EMAs. I put that on the light mode on TradingView. I think it's a little bit easier to see the EMAs on that. Touching on this again, here's my macro perspective up top, the green, red, and blue here, and then on the bottom is just zoomed in. This is the pre-2021 squeeze, which is this box here, and then this box here is our current cycle, which is right here. Really it's just a big W with a tri-peak in the middle. Your first bottom, tri-peak, second bottom, lower low. First bottom, tri-peak, second bottom, lower low, slightly lower low in both. An uptrend that breaks you out of the macro, and then your retest. Exact same thing here. The breakout, and now we're in the retest. It's taking forever, but it looks like the bottom's in to me. Not saying that definitely, but it looks like the bottom may be in here. So touching on this one more time as well, I showed you guys this last time. Pretty much every chart that I'm showing you is what I showed in my last video, just updated now. Nothing really has changed. So running a trend angle from the top of the blue box down over the tri-peak, on both sides, the trend angle is the same. Minus 42 degrees on both sides. So from the start, right over your tri-peak, and then right through your breakout. Same exact thing here. From the start, right over your tri-peak, and then right to your breakout. And then on the bottom, from your lower low to the first low, 176 degrees here, 178 degrees here, from the lower low to the first low. So that looks good. I also did this on the light chart as well. I think it looks nice. This is the exact same thing I just showed you, except with a white background now. It looks very good. Really carving a nice bottom here, flattened out, and now we're crowing to the upside with our breakout. Same as here, your first bottom, your tri-peak, second bottom, lower low, uptrend, breaks you out, retest, squeeze. First bottom, tri-peak, second bottom, lower low, uptrend, breaks you out, retest. Next is squeeze. As soon as this retest confirms and we get the upside back up to 650, our high from the breakout was 620, we should see a slightly higher high on the other side of this, and then from there we would be gapping up to the top of the tri-peak around the $8 to $9 range. The only difference here with the retest is this is descending, which should not be a surprise to anyone. I've only mentioned this about 17,000 times, is that the macro, the bars that we're tracking, this green, red, and blue here, is flat, and this green, red, and blue here is descending. We're tracking this perfectly. The only difference is we are descending. So, I mean, it makes sense that our retest, we're descending rather than breaking out and forming a W flat and then confirming it from there. We broke out and now we're retesting, except this is descending. It's holding up very nicely. A few breaks below, which we also saw back here. You have a few breaks below the retest, and then you confirm and bounce off from there. So no complaints there. Looks good. Jumping into the breakout now, and I mentioned this in my previous video as well. From your low, you form an uptrend, which breaks you out of the macro. Same exact thing here. Form an uptrend that breaks you out of the macro. From there, from the top of the January 2021 breakout, you come down to your bottom and find an uptrend. Mentioned this in my last video as well. Same thing here. This took longer to get to our bottom, our first bottom, but we did. You get to your first bottom, which is below the resistance, as it is here. You form an uptrend, which takes you back above the resistance, as we did. And then from that, you break down and then break back below the resistance again. And then from there, you confirm the test and then bounce up. And we did the exact same thing. From this uptrend, broke down, broke through here, reclaim, broke through here, reclaim, broke through here, reclaim. So this this macro resistance, previous resistance, now acting as support, is very, very strong. We're holding up well. This retest is just taking a very long time to play out. But in my opinion, we are there. So now jumping into this, here's the retest just zoomed in from the 620 high. This previous resistance now acting as support is acting as very, very strong support. Bounce here, and we have an overhead resistance now, which is actually taking us into a descending wedge here. So from this, the macro resistance, you find a bounce up to this micro resistance, which is forming a descending wedge. Reject there, find a bounce here again off the macro resistance, break through it, reclaim it, break through it, reject, reject, over and over rejecting, break through it again, bounce off of it again, reject the micro resistance up top, reject it again here, come down, bounce again, reject off the micro resistance up top, come down, break through again, reclaim again, bounce off the micro resistance up top, break through the bottom again, reclaim again, break through the bottom again, reclaim again, reject the macro up, the micro resistance up top. So this retest is taking a very, very long time, but it looks very good. It's holding up. We've only had like one or two closes in a span of 4 weeks, I believe, under this this macro resistance. We're just holding above, which is a very good sign. That pump that we saw today to, I think it was 465 was the high of the day, rejected right off of our micro resistance that we have up top, which is pinching us down into a descending wedge. So with that being said, there is not much room here to work with between our macro resistance and the micro resistance. So we're really getting pinched down here. What can we expect for tomorrow? One of two things. So tomorrow could go one of two ways, in my opinion. We could either reject off of the micro resistance one more time, double bottom 438, I believe was this low, double bottom here, which would actually be the macro resistance. We would find a catch on the macro, which would double bottom us perfectly at 438, and then bounce from there, and that would be your low. And you know, it would, tomorrow's probably most likely going to be boring in my opinion anyway, relatively sideways. But this would be the confirmation of the retest, and then next week we would expect to start seeing some upside, the climb back to the top. Or tomorrow we just break through this micro resistance. I wouldn't expect anything too crazy. Maybe you come up to like the 470, 480 range. Excuse me. Close the day there. I've seen this descending wedge play out multiple times on AMC. Usually how it works, and it looks very similar to this, is, you know, you're just trading in the descending wedge, getting pinched down, until the support and resistance gets very close together. You break above it, close above it, like hovering right above, and then the next day you would gap down to test on the previous resistance, and then from there you would confirm and go. So again, tomorrow more than likely is going to be a boring day. Relatively, low volume, barcoding. Two scenarios: either double bottom 438, or we just break right through this micro resistance to the upside and start climbing back up to the upside. This move here looks like an inverse head and shoulders. It looks like a bottom is being formed here, which is very good. And that is pretty much that. I mentioned in my last video as well that fractally speaking, we don't have much more to play out. So we're in the middle of our retest now. So just going over this again, the trend angles are the same. The start of the blue box, down over the tri-peak, and then to your breakout, minus 42 degrees. Over here, in the current cycle, again, same thing, minus 42 degrees. Start of the blue box, over the tri-peak, to your breakout, and the retest. The bottom, the lower low to the first low, 176 degrees, 178 over here. So we got the first low, we got the tri-peak, we got the second low, the lower low. Same thing, we got the first low, got the tri-peak, got the second low, the lower low. From that lower low, you form an uptrend that breaks you out of the macro, which we did. Broke out of the macro. From there, you come back down and test, breaking above and below the previous resistance, testing it as support, which we are doing right now, breaking above and below this previous resistance, acting as support now. Once this confirms, what's left is a climb to 650 roughly. This big candle here, this boom candle here, would be our climb to 650. And then from there, you get a gap to the top of the tri-peak, $8-9. From there, you squeeze. I mentioned this last time. More than likely, the way this is going to play out is going to be very symmetrically, where it's going to take a while to get back up to the 650 range. What we're looking for could potentially take 2 or 3 weeks, maybe even 4. We got 4 weeks to the downside. I don't think it would really take 4. I would lean probably more 2 or 3, but I'm assuming this move will play out symmetrically as it did back here. This played out symmetrically. It was just flat. I'm assuming this will play out symmetrically as well, where we will come up to the 520 range, kind of flatten out there, battling for $5 for a while, potentially a week there. Pretty sure this was a week of price action here. At this $520 to $5 range, flatten out, and then from there you curve up and finish the cup to the upside. So this would play out as a symmetrical move as it did back here. Alternatively, I mentioned this last time as well, it's possible that once this retest confirms, we just see boom candles right to 650. Leaning more towards it's going to take 2 or 3 weeks to play this price action out. As I've previously mentioned last time, the OPEX dates cannot be ignored. We passed the May date, so the next one we're looking at is June 27th, and June 27th is roughly 3 weeks away. We have the rest of this week, 1, 2, 3, 3.5 weeks. So 4 weeks from today, pretty much, June 27th. I'm just throwing scenarios here. 4 weeks away. Fractally speaking, what we have left is this climb back up to a double top, and then the gap here, and then squeeze from there. In 4 weeks, you could probably expect that 2 of those weeks at least is going to be spent climbing back up to 650. From there, you would get the gap. This gap was 2 days here. More than likely, it'll take a little bit longer than that, maybe a week in this gap, trading in the $8 to $10 range. And then the squeeze from there should be pretty much instant. I mean, that's how squeezes work. It's just a straight line up. So the squeeze isn't going to take time. The only thing that's going to take time is getting to the squeeze, and the target that we're looking for to trigger our squeeze would be that $8 to $9 range at the top of the tri-peak, as we saw back here. We don't need to go much further. I've seen a lot of people talking about, we're going to see $10 or $20, like a slow climb. Absolutely not. Absolutely not. That's not how a squeeze works. Squeezes are fast. They happen very, very fast, instantly. It's not going to be climbing slow. It's going to be a straight line, as we saw back here and as we saw in June. It's just a matter of playing out the rest of the macro that we have to play out, which again is the retest of the breakout. a double top slightly higher than the breakout that we saw at 620. So we're looking for a double top roughly at 650, a gap up, which would be to the top of the tri-peak around eight to $9, and then from there a straight line. When the time gets closer, I'll go over our peaking scenarios, price targets to be looking out for, what I'm going to be looking out for. I see it playing out two or three ways, but more than likely two ways. I have two scenarios for our peak. So when the time gets closer, I'll go into that. Right now, there's really no need to touch on that, as we're going to be probably barcoding on low volume for the next couple weeks. Pretty much the same way we saw to the downside, we would now see to the upside. So low volume, barcoding, a slow climb, playing this move out symmetrically to the upside. So that's pretty much it for the video. I enjoy making videos, so I don't mind doing this. It's just, I don't really have anything new to talk about because nothing really has changed. But yeah, that's pretty much it. We're still in the middle of our retest. It looks good. We're holding up, closing above the macro resistance day after day, and it looks like the bottom is in. This move is looking like sort of like an inverse head and shoulders to me. So it looks good. So that's pretty much it for the video. Potentially I'll make another video tomorrow. Who knows? It's probably going to be another boring sideways day. So making another update video doesn't really make much sense. It just really depends on my mood. So with that being said, I will catch you guys in the next one.